How are you, Andy?
I'm good. Good to see you. Good to see so many people joining us today.
As well, I know lots of you on today. Thank you so much for joining us for our review of the budget. Just before we start, I think it's worth quickly introducing ourselves, if that's okay.
Yeah,
Um,
after you, Liv.
okay, so I'm Olivia Drennan. Andy calls me Liv. You can all call me Liv. I'm marketing director at Deepbridge. My job is all about education, really. Two advisors. So I'm incredibly sad. Was so excited about this budget. Didn't sleep Tuesday night. So very excited to speak to you all about this today. And Andy?
Thanks, Liv. Hi, I'm Andrew Aldridge. I'm Chief Marketing Officer and partner at Deepbridge. For my sins, I'm also a board member of the EIS Association. So hopefully I can add some comment around EIS and the venture capital world.
Definitely. And we'll talk more about ESA later on. But just before we kind of get into everything, we wanted to run this webinar so we were kind of the first to react to the budget. So it is going to be kind of headline info today. Because basically we understand you've got clients invested in the products, or you actually might even be joining us today because you are considering investing or adding these products onto your investment portfolio. We will probably learn more about the budget over the next week or so. So, of course, we'll update you all any changes, any new information that comes about. So, considering that this is our first reaction, please bear with us as we kind of learn together with you, with the nation, on what to expect or what the impact might be of these announcements. Super informal, Deepbridge style. If you've joined us for webinars before, you know we love the interaction from you. So please, if you've got a question in mind already, or if you have any questions that come out as we go through, pop them into that Q&A function, which you should see on the kind of Zoom bar. It's either at the top or the bottom of your screen. We will potentially answer these as we go if you want to answer them at the relevant point. If we miss any, we will contact you afterwards. And the last thing is we've kind of blocked out 45 minutes today. Me and Andrew talk quite fast, so it might be shorter, but we'll see. We'll see if we can get through everything. When kind of compliancy bits just to cover, when speaking about investments and tax, specifically tax efficient investments, such as the Enterprise Investment Scheme, the Seed Enterprise Investment Scheme, and Business Relief, which we will cover all of these today. Please note that these are high-risk investments and investors can lose all of that money. The views that we express, and we're going to try keep opinions to the minimum, but they might creep in there.
We'll see. We'll see.
Our personal views, not that of Deepbridge, and please don't take the content of this webinar as advice. So, as I say, this is an interactive session. I'm going to be cheeky and launch a poll just as we get into the, oh, actually, I can actually see that some people have already answered this poll, which is great. I might have preempted that poll a little bit soon. Okay, cool. If you can see a poll on your screen, please answer that, and we'll get into the first question, which is, let's talk about the budget. What are your initial thoughts, Andrew?
Yeah, thanks, Liv. Hi, good to speak to everyone today. First and foremost, I don't think there was trying to be apolitical. I'll try and keep a level head. For those who know me, that might be slightly tough. So I apologise if I do stream into if I do stagger into kind of conjecture and my personal views. But I thought it was largely it was unsurprising. I think this is a Labour government budget. It's the first Labour government budget for a long time. I know some Labour Party members would say this is probably the first proper Labour budget since the 1970s. We are not in New Labour anymore. This is a new focus, or a revisiting of a focus from the party in government now. So I don't think there was a huge change there. I think the more I've kind of looked at kind of the impact and kind of some of the numbers and the projections and the forecasts from like the OBR and the IFS this morning, I think the gist of the budget was more political posturing rather than anything kind of
Mm.
strikingly economic differentiational in terms of making a real impact on economic growth, etc. going forward. It was very much about posturing and a focus on big government, if you like, highlighted by the fact that one of the key things that I kind of took as maybe a slight surprise or slightly staggered by was the announcement that there's 5,000 new HMRC compliance jobs. That's increasing headcount HMRC by 7%, sorry, 5,000 new jobs.
Yeah.
That is maybe probably one of the surprising elements of the budget, which shows maybe why taxes need to go up. So never mind the expense, chess, etc. It's going to get HMRC. But anyway, that is me getting on my high horse.
Yeah. Stop.
Push up. But I think the fact that they are focusing on infrastructure projects, funding the NHS, etc., and therefore taxes need to go up. I don't think anybody would be surprised that that is what happens when you have a left of centre government. And going after the wealthy and business owners is kind of their want and their drive. So I think, nothing majorly surprising there. But interesting to see that increasing taxation by 40 billion is perhaps even more than most people suggested that would as a target. But interesting, but nothing particularly surprising in terms of the general themes.
Yeah, I echo you. I feel terrible because you're on annual leave at the moment, and I'm sure this has taken up a lot of your time, as loads of other people that are on annual leave. Very kind of them to do that this week. Just to touch really briefly on some of the answers of the webinar. Hopefully you can see these as well as me. So I asked you, why did you join the webinar today? 35% of you said it was because of business relief, the impact on business relief. 26% said the impact on EIS. 12% to learn more about both products, and 27% about all of the budget. The big one, all of the above. 60% of you said all of the above, which is great. Of course, we're going to cover all of the above today. So you've kind of given us the headline stuff, Andy, but what was it that you think was most sort of pleasing about the budget announcement, in your opinion?
Yeah, so pleasing from my perspective. I am biased, obviously. A penny off beer at the pump. That's a nice thing. We'll start with the actual headline that we should all be grateful for. But no, in all seriousness, I think we've known this for a few weeks now, but EIS and SCIS are very much here to stay. They were mentioned pre-budget by the Labour Party. Obviously, EIS being extended for another 10 years under this new government's regime. So that's all very positive, and I think is great news for investors and financial planners. So again, I think that's hugely positive. The changes to IHT were potentially not as dramatic as people were forecasting, and I think one of the things that I think we all realised that the last few weeks, a lot of the conjecture and kind of mooted points in the press, etc., were kind of testing the ground and seeing what could be acceptable. But in reality, changes to business relief is relatively benign. There will be some larger states and some larger kind of individuals which will be caught up in that. I think we can expect to see a lot of backlash from the farming community around the agricultural business relief, but again, only around 25% of farming land will be affected by that. So I think relatively benign, and I think the staggering, etc. When they're talking about annual allowances in general for business relief, I think the staggering, etc., kind of makes sense in that sense. So I think relatively benign in terms of the impact. Of course, all of these things create more work, more calculations, more moving around things for financial planners. It doesn't make financial advisors' jobs any easier. With compliance pressures already, these things are just another curveball. That's part and parcel of being in financial services. I think one of the interesting things that I think we will find out more about over the next 2 years is around AIM and the changes to business relief on AIM products or AIM stocks, that being reduced to 50% of an IHT liability from April 2027. So we've got about 2 years. So there shouldn't be a dramatic impact on AIM in the short term. Obviously, I think like everyone's probably been keeping an eye on the AIM market and the FTSE markets this morning, see how they're reacting, and they're still dribbling down. Nothing like the quasi effect of a couple of years ago. So nothing that dramatic. So I think we've got 2 years for AIM to work out how that sits. So again, I think that wasn't a knee-jerk reaction. It wasn't an overnight thing. So again, there's a little bit of consideration there for how markets and investors behave. But again, I think one of the key things that I was pleased about was the reference to growth and economic growth throughout. However, interestingly, I think one of the things that I would say is that out of 170 pages plus of the actual statement, the word entrepreneur is only used 6 times, and 2 of those are in the opening statement saying they're going to talk about entrepreneurism. So, the fact is, as entrepreneurship, entrepreneurism in the UK, I think is something we've got to have to fight for as an industry. EIS and SEIS, I don't think we should take for granted. We're going to have to fight for those going forward as well. We're going to have to fight for business relief. So I think there's going to be a lot of work to be done to protect investors' best interests and business owners and entrepreneurs' best interests going forward. However, they have categorically stated they are about economic growth and entrepreneurship. So there are things there we can hold people to as well. So I think those are the things that please me most with EIS and SEIS. Obviously, business being relatively benign and quite if you like, a sensible approach taken, but also this focus on entrepreneurship being mentioned as not as much as I'd like, but it's certainly there as a key cornerstone of their growth plans.
Yeah, and I think just for everybody's benefit on the call, let's go a bit deeper into business relief. So you've touched on what the impact will kind of be for those at junior stock markets like the alternative investment market AIM. And we know that is being reduced to 50% IHT across the board. But what about business relief, unquoted business relief holdings? You've kind of mentioned the £1 million allowance, I think they called it. Could you just explain that to everybody?
Yeah, so there'll be each individual will have a £1 million business relief allowance. So anything over that £1 million then will be, if it's business relief qualifying, will be eligible for 50% IHT mitigation. So if you have a first £1 million of business relief holdings, there's no IHT payable on those holdings as long as you've held them for 2 years and you held them on death. And anything over that would be taxed at 20% rather than 40%. So again, just some of the initial numbers that are being mooted kind of in the press and things today show that's going to be a relatively small number of estates. But that is something that we're going to have to keep an eye on, and particularly over the next few years, particularly as limits on IHT, etc., remain capped, more and more people get caught out by that. So it is definitely another thing, and like I said, another calculation that financial planners have got to be aware of.
Yeah. And just to be super clear, so it's AIM, everything is reduced to 50% IHT. Right. There's no kind of £1 million allowance, but unquoted business relief, there is the £1 million allowance. Is that a concern?
I think for a long time I've spoken about if a government wanted to change things around business relief and wanted to look at business relief, then one of the simple lines of legislation was around AIM, and therefore they are single AIM or unlisted stocks on junior stock markets is one line of legislation. So that's quite easy. I've said that for years, that it would be an easy thing for them to change. So for them to do something, I was kind of slightly surprised. I think everyone's seen, that AIM has been struggling over the last couple of years. Not necessarily in terms of fund performance, but in terms of the number of companies on AIM has gone down considerably over the last few years. The number of companies raising for the first time on AIM has decreased over the last few years. The number of IPOs, etc. So I think that as an entity needs to be looked at, and I think that will, the government have said they will look as a consultation. One of the reasons why it doesn't come into effect until April 2027, is so that it can have a consultation and look at that. And I think there will be changes around junior stock markets and what that looks like. And I think that's something that's been talked about for a little while under the Tory government as well as the Labour government. So maybe this is the first kind of playing with the edges of what that looks like, and what the future of junior stock markets in the UK looks like. So I think in that context, that's fine. I think, again, the fact they've put a 2-year window on it, so all the advisors on here today who have got clients with AIM stocks don't need to go and sell straight away. They've got 2 years to kind of get their head around planning before they start moving over to other BR qualifying assets or what have you. So again, there will still be a place for AIM. There's still a place for AIM in BR planning. So all these kind of things do come into play still. However, it just creates an extra complexity, and as part of wider considerations, the government is going to have to consult to assess how they utilise AIM or other stock markets in the future.
Yeah, I think we just had a question as well that you've kind of already answered, asking, great question, was there any form of transitional protection in the budget detail for those already holding AIM portfolios, given qualification for BR doesn't happen until death? And you've just said it's going to be after 27.
Correct. 6th of April 2027 is when these changes come into effect. So you have got 2 and a bit years, pretty much almost 2.25 years or 2.5 years to kind of get plans in place. So again, hopefully that removes some immediate kind of panic. Other question that came in was, does the 1 million BR limit also include EIS? Understanding is yes, it will. So the IHT exemption under EIS is business relief, so therefore that will come under that as well. Is my understanding, but if that changes, we will let you know.
Yeah, we need some more clarity on that, don't we? But we'll talk about that in more detail later on. I think it's worth saying that according to MyCap, there are currently around 39 AIM business relief products available to advisors, versus around 32 non-AIM funds that could be unquoted businesses, corporate business relief as well. It will be interesting to see how this changes over the coming months in the lead up to that April 2027 date, and whether the 50% IHT saving.
Can I just make a quick correction? Sorry, it's not 2 years on AIM, it's 1 year. It's 2026 it comes into.
2026. Oh, right. First mistake. There you go.
It's the inherited pensions, which will come onto in a bit, which is 2027.
Which is 27.
So many different dates coming out here, so apologies on that. But thank you.
Sorry. Yeah, you're right. Yeah. Yeah, it'd be interesting to see if that 50% IHT saving remains appealing in the long term, or whether you will see a kind of switch from AIM to non-AIM products, and things like the Deepbridge estate planning service plug there. It is relatively simple process, but we'll talk about it a little bit more later.
And of course, with business relief, if you were to transfer to other BR holdings in the meantime, until then, the clock will start from when you first invested in BR. So it's not, the clock won't start again. It will be from include your previous holdings as well.
Yeah, the 2-year clock, it will just kind of transfer over. So whatever time you've done, you will do the remaining in the new product, which is a big advantage. Or if you've already done the 2 years, you'll be immediately exempt. So moving on to other IHT considerations, the kind of other key new consideration for a majority of advisors is that IHT is now going to be applicable on inherited pensions. That is, as we've said, from April 2027.
Right.
I've had loads of chats about this week, my own family, with advisors. I think it is quite a big disappointment. Years of great IHT planning, thinking the pensions are going to be kind of efficient, but maybe they're not.
But I think in that sense, I think it will increase the relevance of business relief for many people. It will increase the need for good estate planning from financial advisors. So I think that it will drive the need for financial advice. A lot of individuals who maybe have just had their pensions rolling and probably never looked for financial advice because they've just been in their pension and that's been their entire planning. It hopefully will bring opportunities for financial advice, and for a number of our friends and contacts on this call, there'll be opportunities there to help clients further. And I think all these kind of idiosyncrasies do just increase the need for financial advice. So I think from that perspective, there's definite opportunities here for the financial services world.
Yeah, massively. So it is a few years away, but I think it is more important than ever to consider all IHT planning options. So you think bringing pensions into your estate means that so many more people are going to fall over that £1 million tax-free threshold, which is available to the married spouses. But also remember that your full estate, obviously pensions included now, all after 2027, will potentially knock you over the taper threshold, £2 million. So for every £1, every £2 over the taper threshold, you lose £1 of your residence nil rate band. So basically shrinking that tax-free threshold, which I can imagine we'll see at the time will be apply to a lot of your clients. Fantastic opportunity. Nice to offer business relief, I think, as a alternative to those people say like more traditional kind of business relief is quite traditional now, and options like gifting, trusts, because with those you have to part with your capital. Whereas nowadays, I think that people have a lot more active retirement. They want to keep access to the cash, and they're also potentially planning for long-term care with the aging population. So it can be a really nice addition. Even if you hold more than £1 million in unquoted business relief, it's still 50% less inheritance tax that you are going to have to pay anyway on the amount invested holding for 2 years and on death. Any kind of comments whilst I launch this poll on that? Oh, I can see loads of questions coming through. This is great.
No, I think you're absolutely right. I think one of the questions that's come in from one of the guys on here is do we think that this is the thin edge of the wedge in terms of AIM, and that 50% relief, will that disappear later? I think there's I think on the whole, I think we have to expect that this is the thin end of the wedge for for the government we've got. There will be further tax increases over the lifetime of this government, I would imagine. If you look at the OBR statistics that they came out, and level of funding into like the NHS drops off after year 3, economic growth drops off after year 3, etc. So there will be a need, unless we have super economic growth in the next 2 years, for further revenues to be created by government. So I think we have to look at all of these things in isolation, and have a look at actually what would be thinking down the line to increase these incrementally or what have you. But yeah, potentially, like I said, I think AIM as a whole will be reviewed by this government, and I think that is something which is overdue. And I think again the Tories were looking at this as well. So I think there will be a wider consultation around AIM going forward, and what happens. How do we create a junior stock market which is fit for purpose? Because let's face it, the junior stock market is predominantly there to create liquidity for early investors, to create that next level of funding on growth journey of a company, and then they should, after a while, be maturing onto the main markets, and that just hasn't been happening over the last few years. So there is an issue with AIM that needs to be looked at. So BR and AIM, I think, is something which is only the thin end of the wedge for the whole conversation around AIM. However, there's still some very good funds in the AIM market. There's still BR qualification next 18 months, so I wouldn't rush into kind of knee-jerk reactions just at the moment. I think people should be looking and considering the market and considering what they want to do. But again, there are going to be question marks over AIM, and there have been for a little while. So those considerations, I think, will continue.
Yeah, definitely. I'm just going to share you the results of this poll that I launched just as you were talking there, Andy. So the first question was, do you anticipating business relief investments, kind of discussing BR more in the future? And which one do you think would be more popular, AIM versus unquoted? Just to put these results in perspective, it's actually quite a good live survey. We've got over 100, and we've got 104 advisors on the call today across the UK. So it actually gives you a really good indication of the kind of sentiment at the moment for your peers in the market. So 94% of you said that you think you will be discussing business relief more. 60% said unquoted business relief, only 5% AIM, and 35 both. So some really
not surprised there, I guess. Not a surprise at all. And just to answer to one of the questions came in, did BPR assets come towards the estate value for taper, etc. on the rate band? Yes, it does. BPR assets are within the estate. They are just exempt, or to be 50% exempt from IHT, but they are still within the estate, so they are still part of estate calculations.
Really good question. Lots of people get confused on that, so thank you very much for raising it. We'll keep answering the questions as we go, but I think it'd be a good time to move on to CGT, everyone's favorite, capital gains tax. surely any increase in CGT is kind of good news for enterprise investment schemes, seed enterprise investment schemes, Andy.
I would hope so. Absolutely. I think what we found over recent years in particular is that CGT is a significant driver for investments into EIS and SEIS. With income tax advisors, we see do use EIS and VCTs, etc. But obviously, if it's for CGT play, then EIS and SEIS are particularly pertinent. Again, just to remind people, on EIS, you can defer a capital gain. You can go back 3 years or forward 1 year, so you can defer a capital gain for the lifetime of investment. On SEIS, you can mitigate 50% of an IHT of a capital gain tax liability, but that you can use against this tax year or the previous tax year. So again, any questions around that, then speak to your local Deepbridge representative. But CGT under SEIS is mitigated to 50%. Under EIS, it is deferred.
It's basically relief, isn't it? I think people do get confused with that with CDIS. I hate the word exemption, mitigate. This is all government words. It's basically CGT relief, a portion of it, 50% of the gain, and then with seed, the deferral is kind of just delaying the bill.
Correct. Yeah. So I think, let's face it, again, all the kind of trial by media over the last few weeks has all been about talking about CGT going up to income tax levels, which could have meant 45% CGT, mooted around, the 30 something percent. I think I owe somebody a £5 because I said I thought it'd go to 30%. So anyway, that's so if that was you that I had that bet with, then let me know. But please don't.
It was me. Give me the £5.
So I think, again, it's relatively benign. It's relatively sanguine, relatively considered in the sense that, yes, CGT was there. It's going to be there kind of for the taking for a left of centre government coming in. It also, like I said before, leaves them with options in the future. If they do need to raise taxes in the future again, then they could well look at CGT again. So I think that is a consideration. But again, that's not scaremongering. I think that is just the nature of the beast and where we sit and what we are now. So I think because it is relatively small, it's what a 20% increase in the level of CGT, so going from 20% to 24%. I'm hoping that doesn't decrease interest in M&A activity, and I think that would be something which was some of the feedback fed to government was that if you were to hike CGT significantly, then it would dissuade M&A activity, and also my great concern was that if you did have CGT up at, say, an income tax level, then that would be a massive red flag for people considering setting up a business. What we invest in early stage tech and early stage life sciences, my kind of analogy was if you had a graduate from a great British university who'd been working on a PhD or whatever, or some really interesting science within the university, and then wanted to spin that out into a company, they probably would have a good job offer from the likes of AstraZeneca or somebody, a big blue chip farmer over in the US, or they could set up their own business and look to themselves here. And if you were getting taxed close to 50% on any growth you made from it, then I think you would have seen people leaving the UK, and you would see that brain drain of early stage innovators leaving. So I think 24% does prevent that slightly. I don't think it's. I think we still need to be aware of that going forward. So I think. We can't rest on our laurels. We can't just go, okay, right, that's fine, they get it, etc. But I think, like I said before, EIS, VCTs, business relief, we as an industry are going to have to fight for under this government. We are going to have to make sure they understand the benefits of these schemes for investors, but particularly for entrepreneurs, for business growth, etc. So I think all these things need to be fought for. So I think the question around CGT doesn't go away. I think there will still be a lot of conversations, a lot of debate around CGT levels, etc. I think there's a hell of a lot of debate to be had around business asset disposal relief, which used to be entrepreneurs relief. Over the next 2 years, that goes up from 10% to 18%. That's a massive increase. So if you think, just a few years ago, the first £10 million was taxed at 10%. Now it's only the first £1 million which qualifies for BADR, and that's 18%. That is again going to hit those risk takers and those people that have supported and grown businesses in the pocket. So again, all these kind of things just start to add seeds of doubt into entrepreneurs' minds, etc. So again, It's if you have got a great business idea, you've got a great bit of science, then you probably are going to run with it still. But it's just these little things which start to see doubts. I think we do need to see more from the government around their commitment to supporting entrepreneurship, commitment to supporting scale-ups and startups. So again, that'll be interesting to see as we go forward. But yeah, all in all, CGT was nowhere near as bad as people were expecting. I think the question that we have had over the last few weeks, and I'm sure you have as well, Liv, is that I'm sure a number of IFAs who deal with the EIS is, well, why if you sold your business last year, for example, and you've got a CGT bill of 20% on that, why would you use EIS to defer that down the line into a future world where CGT is going to be at least 24%? And I think there's two reasons why EIS is still particularly pertinent to individuals in that scenario. One is that you still have an annual allowance. Yes, it's only £3,000 a year, but if you're in a portfolio of companies, they're probably going to exit in different tax years. So again, you can use that on an ongoing basis and actually wash through quite a bit of that CGT through annual allowances over time with EIS, which I think is great and will actually reduce the overall impact of CGT. And also, secondly, of course, what we all hope is that you are going to make some significant returns or some decent returns on your EIS investments, which is CGT exempt on all growth there. So again, you should be washing through and be able to pay off your CGT when it comes to exit via the growth that you've achieved under your investment. So again, EIS is still extremely pertinent for that. But then, of course, SEIS, you can write off 50% of a CGT liability. So again, that becomes even more relevant. So again, overall good news for EIS and SEIS, but I think the fact is that we still want to make sure that the government is committed to supporting science, innovation, entrepreneurship, etc., to make sure that when people are investing in EIS and SEIS, that there's great places for that investment to be held. We don't want to just be investing in companies for the sake of it. We want to be making sure we're investing in the very best tech and the very best life sciences. So we want to make sure that's encouraged, and I think that is going to be an ongoing battle over the course of this government to make sure that is front and centre, and that is where growth is going to be achieved.
Yeah, well, let's talk a little bit about that. I might just quickly add as well, if there is anybody on the call that isn't familiar with EIS, Seed EIS, another tax release, we will be launching an educational webinar, which will be a 3-parter in the next couple of weeks. So please let us know at the end of this if you'd like an invite. But obviously, Rachel Rees is talking a lot about kind of the importance of science and innovation. So we've recently launched our UK Innovation Seed Fund, our brand new Seed EIS. So that might have been quite nice for us.
Yeah, I think the quote from the Chancellor from yesterday was the UK's science base is a crucial national asset. So again, we know there's a support there. We know through money that they are looking to invest via the likes of British Business Bank, etc., that there is a great desire to support these industries. Again, one of our key things is we want to make sure that these investment opportunities are open to appropriate investors through IFAs, so that it's individuals benefiting from some of this growth and not just public-backed entities, etc. But a couple of smaller things which maybe have gone under the radar slightly was yesterday they did say there was going to be no changes to R&D structures, so R&D benefits, etc., and things like that. So that's extremely positive. I think there is again significant work to be done around R&D and tax claims, etc., because it's a process that needs to be simplified and it needs to be encouraged, and there have been ongoing issues, but that's a conversation for a different day. But I think also we do need to acknowledge that across the UK, the collaboration that goes on to support early stage founders. And I think, myself and a few peers in the market earlier this year were invited to a round table with the then Shadow Business Secretary. And when it came to closing remarks...
Ooh, name drop.
She's not in government at the moment, anyway. But when we were concluding, we were talking about how to support innovation and support startups and scale-ups in the UK, etc. And as it came to closing remarks, again, because maybe I'm sometimes forthright in my opinions, I was asked to kick off the closing remarks. And my comment to the Labour MP was that part of the key for them is to know when to back away and not to get involved. I think that is always a concern that governments like to meddle in things and like to tweak things and do things that don't need to be meddled in. And I think in the UK we do have great local regional clusters. You've seen what's grown up around Oxford and Cambridge over the years in terms of that kind of startup kind of mentality and initiative, and we're seeing that being replicated across the UK, whether it be Aberdeen, Belfast, Liverpool, Bristol, Exeter, Southampton, Newcastle, you name it. There are great clusters now being created, and a lot of that has been organic. That has been angel investors, funders. That has been the R&D kind of world coming together. That has been academia coming together. It's been local businesses, etc. So again, from that perspective, I think we need to recognise that, and I think that's going to be one of the key things to encourage that going forward. And also, I think we do.
Sorry to interrupt, but do you think that Labour would be more likely? It's just a really interesting point, actually, because I don't know if anybody's seen President Trump's recent podcast with Joe Rogan. He was talking about the kind of dangers of government meddling. Do you think the Labour might be at more risk of that than Conservative were?
I think you just compared me to Donald Trump, in my opinion, there. So
you're so much like him.
We'll discuss that later. Anyway,
I'm sad.
Anyway, sorry. Let's not. No, I think there is government has a part to play, and I think one of the areas where we do need government involvement is around AI in the UK, and I think you do run the risk of being left behind in the AI race. Artificial intelligence is here to stay, and technology development in that world is going to be extremely important. The US and China are leading the way by far in those markets, and the French make a regular claim to being kind of the EU centre of AI, and the UK does risk being left behind, not because of lack of academics, lack of knowledge, lack of skills, but it's the collaboration that needs to come around, because for AI computing, etc., you need massive data centers, you need massive quantum computing, the energy infrastructure to support that is hugely important. And there's things being let down in the UK, things like local planning laws, the lack of energy infrastructure, all these things. That's where government really needs to come in and play its part in areas like that. But where you've got good economic clusters in regions, that should be supported rather than government trying to get involved. And I think that's the critical thing, is that they need to understand where they need to get involved and where they need to let things organically grow. And I think that's going to be one of the things that we see over coming years. But things like the UK Innovation Seed Fund that we launched fairly recently is getting involved in those clusters and supporting them and bringing together like-minded investors and like-minded supports. And I think that's really key, and that'll have way more regional and local impact than government impact, more entities like that. But where they can really add value is around these kind of things, about bringing together things like AI innovation and making sure local rules and things don't get in the way of that, and making sure that infrastructure is in place.
That's so interesting. I love talking about AI. I wish I knew more about it. But I've just launched a poll, kind of summarising our EIS, CDIS discussion. Same as before, do you anticipate discussing this more? If yes, why do you think this is the case? Do you think that it's going to be because of capital gains tax increases that explore clients to learn more about EIS deferral or CDIS exemption or relief, as I like to say? Tax-free growth on any returns, income tax relief, which is 30% for EIS, 50% for seed, don't forget, which is whopping of the amount invested. EIS share loss relief for downside protection if companies don't do well, and the inheritance tax relief, or all of the above. So I'll just leave that on the screen as we kind of go into the next question. A couple of minutes left, so we'll keep these nice and short. Loads has been kind of made about like how the increased tax burden of this budget falls on the businesses, on the employers. So I'd really like to hear your thoughts on if that should be a concern for the kinds of companies that we're investing in.
Yeah, great question. I think it was pleasing this morning that Rachel Reeves on the Today programme did admit that the changes to employer NI contributions are going to impact working people, whatever the definition of working people is today. But we'll maybe we should have done a poll on that. Can you define what a working person is? But anyway, that's a minefield. I think for the average business, then it is going to be problematic and it is going to be a squeeze. I think there is, and again, this is maybe slightly becoming, slightly soapbox-ish, but I think there is still an issue that we face amongst some MPs of various different colours and parties, where they pin business, in inverted commas, all in line with, they expect every business to be like Google, etc., or big entities that just refuse to pay their taxes, etc. And that's kind of sweeping statement, and they think that a business owner is rolling in cash and is just sitting there counting their dollars and their pounds every night and what have you, when reality, a majority or a good number of people on this call today will be business owners themselves and will know that, as business owners, you have to make tough decisions all the time. And, it's not about, just throwing monies at problems, because you don't have that capital. Most companies in the UK aren't rolling in massive profits, etc. So it will have an impact. It will have an impact on companies' ability to recruit new staff, to give pay rises. It will impact on their business and on their decision making about investing. An average company with 20-ish employees will probably end up paying somewhere between £40,000 and £50,000 more in NI over the course of a year. So again, that might put squeeze on people taking on apprentices, or that could be
Also,
two apprentices or two graduate scheme individuals or two support staff that you're not going to recruit because you've got that pressure on money now. So there's things like that. I think one of the things that was pleasing was that this was to some degree acknowledged. It doesn't go far enough, but the introduction of a small business allowance for NI employer contributions was introduced. So anybody employing up to 4 employees has no NI employer contributions. So again, for early stage businesses at that early stage, then that is positive. However, when they need to recruit that 5th person, there is going to be a big step up in terms of cost involved in that. So again, that maybe creates some other problems, but all those things will need to be washed through. So I think it's interesting. Again, I think it was the IFS this morning came out and said, look, that this increase in employers' NI contributions isn't going to go anywhere near to raising the 25 billion that has been mooted. It's probably going to raise more like 12 to 15 billion by the time you knock out kind of all these anomalies and the impacts, etc. So again, that's interesting. It is a big lump sum of cash, though. So out of a £40 billion tax raid, to use the headlines from this morning, that is it's a big percentage chunk of that is through NI employer contributions, and it is a concern for employers, and it's not just about startups and scale-ups, which it will impact absolutely, but it's for people on this call who employ people in the financial services world as well. So that is going to knock on effect, and like I said, it was reassuring that the Chancellor admitted this morning that it will affect working people, but it'll be interesting to see how that works through and what that looks like in due course.
Okay, we've got 1 minute left, Andy, so it has to be a short answer this time.
I'm sorry.
What are your kind of summary thoughts on everything?
Look, again, I think going back to my initial statement at the beginning, I don't think there was anything necessarily massive surprises. I think it was more benign than we expected, based on kind of the trial by newspapers over the last few weeks. I think it was quite interesting listening to the Speaker of the House berating the Chancellor the other day for saying that announcements should be made in the House, not to American TV, which again, was something that the Labour previously criticised the Tories for doing. So again, that was interesting. All of that has led to a relatively benign budget in that sense. It does create a lot more work for financial advisors, but with that brings opportunity. I think there will be a lot of people that have maybe just assumed their pension would be their saving grace in future and be kind of their inheritance to their kids, etc. They're going to have to look elsewhere. They're going to have to work on new things, and I think it is going to make people want to look at tax efficient places to put their money, whether that be BR propositions, EIS, SEIS, wider tax planning scenarios that the folk on this call will be only too aware of and will know in much more detail than I do. So I don't think there's any major surprises, but I think it will certainly create issues for financial advisors, but opportunities with it. And I think the key thing from my perspective is that, that's where we are here to help advisors. So please speak to your local Deepbridge representative, and Olivia runs some brilliant webinars that are training around EIS and BR, etc. So again, please look at those and and speak to us, because there is. We're in this together. We want to support our clients, your clients, and make sure that we are going through the minefield of changes as they happen. And just to reiterate, the changes to AIM off 6th of April 2026, not 2020.
Yeah.
So apologies.
I just had a great comment come through. Somebody said, well, I'm advising my clients that they need to live long enough to die during a Tory government, albeit that might be a tall order for many. Love that. Great advice.
That's a whole different conversation, and I can see who that's from. Julian, maybe you and I need to have that discussion over a beer at some point. But anyway.
I love that. Thank you for that, Julian. Yeah, I mean, really candidly with everyone, I think this budget is kind of not great for me as a person, as an individual. I work hard to hold some assets, and I'll ultimately be taxed more if I kind of dispose of them. But I do think it's really good for our industry. Even just after the election on the 4th of July, our inquiries about EIS and CDIS in particular, seed really, were just massive, unbelievable amounts, 188% increase on non-advised investment platforms in that time, from 4th of July to the end of August. So definitely one to consider, because clients can access CDIS investments through these themselves, which is not ideal for them. You should be going through advisors like you do the proper due diligence and everything else that we don't have time to go into today. But we only work with advisors for this reason. I think if you're thinking about the business relief kind of 1 million allowance, I've been asked so much over the last 24 hours about this. I don't actually think it will apply to a lot of our clients. I don't know what you think. Andy will do some research on it and share it with you all, but a lot of our clients in our unquoted business relief are in their 80s. They don't own businesses anymore. They might not have invested over £1 million. And as we kind of alluded to earlier, with AIM investments, you can swap to unquoted quite easily. So you can do this with no fee charged to Deepbridge, and you do not have to start that 2-year clock. I think we had a question earlier about EIS and is business reliefs, is that going to really impact EIS? Yes, it will, which is frustrating for me because they extended it 10 years under their current tax. So it was a bit of a shocker. But actually, the business relief or the IHT relief through EIS now is usually seen as an extra perk to investors. They're going to be focusing on those much more generous tax reliefs. Think about 50% of the amount invested income tax relief for seed, for example, and obviously potential growth. But yeah, just to echo what you were saying at the end, Andy, I think overall people are going to be paying more tax. More tax means more advice opportunities. But EIS business relief definitely going to be more pertinent than ever, front and center of your tax planning. I'm conscious we've gone a little bit over now, but I just want to share the final poll with you. Have we missed any questions, Andy?
I think we've missed a few. We've had a load of questions, so look, we will go through
so many.
Yeah.
We will come back to you on those questions. They just got a little bit out of control. But hopefully you found this interesting. Any further information at all, we are happy to call you direct, pass you on to your key contact at Deepbridge. But thank you so much for joining the call today. And I'm just going to launch that poll now. It should be on your screen. Thanks, everybody.
Thanks, Liv. Thanks, everyone. Great to see so many familiar faces. Thanks, everyone. Take care. Bye.